And since we're on the topic, I think my last video with Martin Armstrong about, problems governments are going to have. They're going to expand for power because they know the dollar and all paper currency is in deep, deep trouble. They don't want people rebelling when all the rates of everything they pay for go way up, as he talked about. So, speaking on some data like that, global trade is collapsing to Depression era levels. What? Now, when you say depression, are we talking, 1929 or 2008? Because, some people consider that the most recent depression. No, I'm going to say he's probably talking about 1929. We'll probably find out here in a second. This is Zero Hedge. With the trade war between the U.S. and China re-escalating once more, investors are again casting frightened glances at declining global trade volumes, which, as Bloomberg has written today, threatens to upend the global economy's much-anticipated rebound and could even throw its decade-long expansion into doubt if the conflict spirals out of control. Just as tentative signs appeared that a recovery is taking hold, trade tensions have reemerged as a credible and significant threat to the business cycle. That means the boom and bust cycle, said Morgan Stanley's chief economist, Chetan Aya, highlighting a serious impact on corporate confidence from the tariff feud. To be sure, even before the latest trade war, global growth and trade were already suffering, just FYI, confirmed most recently by last night's dismal China economic data, which showed industrial output, retail sales, and investment all sliding in April by more than economists had forecast. A similar deterioration was observed in the U.S., where retail sales, I love this word, unexpectedly. That is the most used word by the financial media you will ever hear. Unexpectedly. When the numbers are good, oh yeah, right in lines with expectations. Oh, this is great. Or, better than expectation. Yeah. But when it goes down, bad, whatever they're talking about, oh, unexpectedly. Economists said that we would see maybe a 3% growth. Unexpectedly, -2%. Anyways, a similar deterioration was observed in the U.S., where retail sales unexpectedly declined in April, while factory production fell for the third time in 4 months. Meanwhile, over in Europe, even though Germany's economy emerged from stagnation to grow by 0.4% in the first quarter, the outlook remains fragile amid a manufacturing slump that will be challenged anew by the trade war. As a result, investor confidence in Europe's largest economy unexpectedly weakened this month for the first time since October. Framing the threat, a study by Bloomberg Economics calculated that about 1% of global economic activity is at stake in goods. Stake in a room? Oh, no, different kind of stake. At stake, not stake in a room. Is at stake in goods and services traded between the U.S. and China. Almost 4% of Chinese output is exported to the U.S., and any hit to its manufacturers would reverberate through regional supply chains, with Taiwan and South Korea among those at risk. U.S. shipments to China are more limited, though 5.1% of its agricultural production heads there, as does 3.3% of its manufactured goods. The macro fears are once again trickling down to the micro level, and last week chip giant Intel tumbled. Not unexpectedly, it just tumbled. What's this? After it guided to a more cautious view of the year. An Italian drink maker, David Campari, Milano SPA, this month noted the uncertain geopolitical and macroeconomic environment. The world economy has been in a significant slowdown for a period, said James Bevan, Chief Investment Officer at CCLA Investment Management. People just have to wake up and look at trade data. Now, I'd rather turn on the news, CNN, Rachel Maddow, MSNBC, and listen to fake news all day. But the best way to visualize just how serious the threat to global trade flow is in the world economy in general. Below is a chart on the year-over-year changes in the global trade as measured by the IMF's Direction of Trade Statistics. And I'm going to go ahead and just share this chart with you. Take a little look. We are seeing the similar stuff that we saw in 2008. Now, I haven't seen the Great Depression thing yet, but I do see this, 2008-9, boom, and where we at right now in 2019. As Q might say, future proves past. So, anyways, that's it for now. Take care.